Morning everyone, I am Kainat Chanwala from Kotak Securities Commodities Research Desk, and like in every episode we will be discussing the factors influencing commodity market trends. So let's get started. What exactly drove the market sentiments this week? Which events led to volatile moves in commodities and more? We'll learn in this audiocast. Last week's market performance was largely driven by easing concerns of recession in the US. At the same time, the dollar soared to a 2.5 month high of 103.87 as a strong retail sales numbers after a robust US jobs report and higher than expected US CPI figures in the previous week prompted swap traders to scale back expectations for rate cuts in the remaining two Federal Reserve meetings of 2024. Resilient consumer spending, which constitutes about two-thirds of US economic activity, and a stabilizing labor market after early summer softness, reinforced the belief that a recession is unlikely. This optimism pushed US equities higher, with the S&P 500 and Dow Jones hitting record highs. Talking about commodities, gold prices remained stable early in the week as signs of US economic strength and comments from Fed official Christopher Waller suggested a potentially less aggressive approach to rate cuts. However, by the end of the week, gold prices witnessed a sharp turnaround and peaked at a record high of $2737.8 per ounce. This surge was supported by dovish policies from major central banks, ongoing geopolitical tensions in the Middle East, and concerns related to the upcoming tight US elections. Similarly, silver experienced an unprecedented rally, rising 7% on Friday to close near $34 per ounce for the first time in 12 years. Now, if we take a look at gold technically, MCX Gold December futures on the daily chart, it has provided an upward breakout of its flag chart pattern, thereby confirming a bullish continuation. Also, price has taken support of its roll reversal, and now prices can test its resistance placed at rupees 78,500, whereas next support for the counter is placed at rupees 77,000, below which major support is placed at rupees 76,400. While on one hand we saw gold and silver witnessing an impressive rally, crude oil witnessed a significant negative momentum. Crude oil WTI Crude fell below $69 per barrel, marking an approximately 8% weekly decline, the largest drop since early September. This downturn was driven by reports of Israel focusing its retaliatory strikes in Iran on military targets and not on Iran oil and gas infra. Additionally, lower demand forecasts from the OPEC and IEA, reduced refinery output in China, and resumption of production and exports from Libya added to the downside pressure on oil prices. Concerns over slowing economic growth in China and renewed calls from President Biden for a ceasefire in Gaza further exacerbated oil market weakness. Along with crude oil, metals also extended their declines as investors reacted to a lack of details regarding fiscal stimulus in China's finance ministry's briefings. China's finance minister hinted at fiscal stimulus and increased debt issuance, but stopped short of announcing the size and the timing of the said stimulus. Also, recent data indicating deflationary pressures and weak consumer spending in China raised doubts about achieving the government's full-year growth target of 5% without substantial stimulus. The Chinese economy grew 4.6% in the July to September period, the slowest pace since the first quarter of 2023, with a 4.8% growth rate for the first 9 months, below China's annual growth goal. Now, taking a look at copper technically, on the daily chart, MCX Copper October futures is trading in its cup and handle chart pattern and has also taken support of its 200 period SMA, simple moving average. Now price can test its resistance placed at rupees 840.8, whereas next support for the counter is placed at rupees 799, below which major support is placed at rupees 784.50. Now looking forward, we could see some momentum building in the metals counter, base metal counter, as comments from the PBOC governor indicate strong support for targeted policy measures in order to achieve the 2024 growth target. Also, gold may continue its upward trend, while crude oil could see a significant rebound due to escalating geopolitical tensions in the Middle East. The Israel-Iran conflict is intensifying, and Israel has ramped up strikes in Gaza and Lebanon following the death of a Hamas leader. Also, attention will be on speeches from several Fed officials this week and flash PMI numbers, which will provide earliest insights into economic activity for October. However, the IMF and World Bank meeting, along with the BRICS summit, is something that's going to take the center stage this week. The upcoming IMF and World Bank annual meeting, starting October 21st, is set to address pressing global economic issues. Markets are also cautiously eyeing the BRICS summit in Russia, scheduled for October 22 to 24. At this summit, Russian President Putin is expected to propose a new cross-border payment network designed to counter Western sanctions and promote national digital currencies, with the ultimate goal of reducing reliance on reducing the dominance of the US dollar. So overall, a lot of geopolitical tensions, some Fed speeches, and most importantly, IMF and BRICS summit are set to influence markets in this data light week. So we can expect more volatility this week. And on that note, I end this session of Commodity Audiocast and hope we've offered you valuable insights. Thank you so much for tuning in today, and we anticipate your presence with us again next week. Until then, happy trading. Thank you.